Hey everyone, this is Scott here again with another video to help you learn how to trade, invest, and master your finances so you can apply that knowledge in the real world and multiply your money. And in this video today, I'll be doing something hopefully a little bit different because from my experience at least, a lot of what I've seen out there on social media from other traders and investors is they really only ever talk about or show their profits. And while of course, yes, profits are certainly exciting and they are important and they can certainly make for great marketing material if they're trying to sell you something, but profits are certainly not the only thing that comes out of trading, right? Losses are certainly just as much a part of the equation as profits, and profits cannot come without losses. There is no trading strategy out there, no trading system that just guarantees you a 100% win rate. It is simply impossible to profit on every single trade that you make. It does not happen. And so as a result, that's why I think that anybody out there who only shows or boasts about their profits or their success is doing other beginner and new traders a huge disservice, because in my opinion, your losses are actually way more important than your profits. And that disservice is one of the main reasons why I created this YouTube channel in the first place, because I want this channel to be one of the most truthful, transparent, genuine, and honest trading and investing channels on YouTube. And so that's why in this video, I'll be walking you through one of my worst trading months ever. It was last October in 2020. The market simply got away from me and I had some pretty nasty losses. But that's simply how trading works sometimes. And even though, of course, it was difficult to go through that period, I'm still glad it happened, because it's in those times of struggle and loss, where you're actually really going to be tested and learn how to become an effective and successful trader. Right when the sky is blue and you're just making money left and right because the market environment is simply conducive for your strategy, there's not a whole lot to be learned in those situations. Right? If you're simply trading in a time where everything's working for you, why fix what ain't broken? But that market environment that was allowing you to make such easy profits in the first place can change in an instant, and it can all of a sudden switch and start working against you. And like I said, when you are tested and really challenged by the market, it is in those times where you're actually really going to learn how to be successful long-term going forward. And so that's why I have no shame in showing you my losses, or no shame in talking about my failures, my defeats, and my mistakes, because one, that's how I will continue learning, and then two, that's how I hope you will also continue learning as well. And so now, before diving in here, I do want to say, as always, if you are interested right now in taking a deep dive into options trading, and stock market investing, please check out my courses on SKILLSHARE. I've been teaching on that platform for over a year at this point. SKILLSHARE is a lot like YouTube, except the content on that platform is geared solely towards the purpose of education in the form of online classes. And in my courses, you will see a lot of the detailed research and analysis that I've done using real stock market data and spreadsheets, graphs, and even computer programs that I have written to help simulate and prove the concepts that I am teaching. And I've dropped some links to some of the more introductory courses of mine in the description of this video below. Now, one thing to note is you will need a premium membership with the SKILLSHARE platform to watch my courses. But if you do sign up for that kind of membership with the links provided in the description of this video, you'll get an absolutely free 2-week trial. And during that time, you can watch all my courses on SKILLSHARE for free. And then once your trial has ended, it's only going to cost you a few dollars a month to maintain that membership, and you'll gain access to my future courses going forward. SKILLSHARE is super affordable and you'll get a ton of value out of it. So again, if you're interested, please check out those links and join the thousands of other students that have already taken my classes. And so now diving in here, and I first want to give you just a brief background and some context into my own trading strategy. As of right now, I'm pretty much exclusively an options trader, and specifically, I prefer to be on the short side of options, meaning I am an options seller. And I will be making a lot of videos going forward explaining exactly why I prefer to be the one selling options as opposed to buying them, but it basically gets boiled down to the fact that the edge in options trading almost always leans in favor of the options seller. And so everything that I do in the market, all of my trades and my trading strategy as a whole, is based entirely off of proven statistics, mathematics, and probability. And so, for example, with pretty much every trade that I make, I typically target a 70% chance or a 70% probability of actually making a profit on the trade. And then with the mechanics that I use combined on top of that, so far over 80% of the trades that I have made have been profitable. But of course, that does not mean that every month I get to walk away with a net profit. Sometimes, like back in October, those 20% losing trades actually overcome and overwhelm those 80% winning trades. And that's just how the game is played. And most of my statistical and mathematical understanding of both options as a financial product and this whole trading strategy that I use comes from my time in college, where I was studying both finance and computer science at UC Berkeley. And so if you continue to watch my videos and subscribe to my channel so you don't miss out, I'll be sharing all of this information in the future content ahead. And so now with that being said, we're gonna hop over to the computer and take a look at those losses. All right, welcome to my October 2020 spreadsheet. This is where I track all the trades that I make on a month-to-month basis here. And so this spreadsheet is quite extensive. I'm not gonna go through all of it, but just to give you a high-level overview of how the stuff works here, if I come over to the left, for each of these trades that I made during the month of October, I have them all organized or grouped by their position type. So for example, I have a position group for any naked calls that I sold, call credit spreads, I had one of those. I had quite a few naked puts that I sold during the month of October, put credit spreads, put debit spreads, and then my go-to strategy, which is the short strangle, and then so on and so forth. And if none of these terms or vocabulary are a bit foreign to you, don't worry about it. Understanding what all these are really is not important for the purpose of this video. So just understand that I personally like to log my trades here and keep them organized based on the specific position type. And then for each of these trades, I track a whole lot of different statistics and metrics about each one. As I said, I'm all about statistics and probability when it comes to trading, so I do like to collect as much information about each of my trades as possible so that I can go back and analyze all that information to figure out where I went wrong, where I potentially made mistakes, and most importantly, how I can improve. So just going into a few here, I'll zoom in a bit. You can see in this column, these are all the ticker symbols of the various stocks and ETFs that I did trade options on for the month of October. You can see here, these are all the different strikes that I chose for the various puts that I sold, or the calls and puts I sold for the strangles, and so on and so forth. I have the expiration dates of those contracts that I sold, the date that I actually entered the position, how many days until expiration from the date of entry, how many contracts did I sell for that one position, and many, many more. And then all the trades that you see here that are still in black, these are the trades that I did put on, that I did enter in the month of October, but that by the end of the month, these trades were still ongoing. So by October 31st, I had not yet actually closed out of these positions for either a profit or a loss. For these trades, that would happen in either the month of November or potentially December. And so then the trades highlighted in green here, as I'm sure you can guess, those were the profitable trades that I made, that I was actually able to close out and exit during the month of October. And then of course the trades in red, those were the losing trades. And so you can see if I zoom out here a little bit, that even in a pretty bad month, I still did have a lot of winning trades. And I would say that the majority of the time, this is how it should be. Even in a bad month, you should still have some winning trades to help offset those losses, right? I have never had a month where every single trade that I made ended up as a loss. Even back in February and March of 2020 when the market crashed by over 30%, yes, that was definitely a losing month for me as well, but I still had some winning trades. And as I said, those winning trades that you do still have are going to really provide some cushion to help counteract some of these pretty nasty losing trades. And so if you are someone who is making a lot of trades every month, whether you are trading options or stock or whatever, and you do have a bad month and all your trades are losers, my gut would tell me that you're probably doing something wrong. You're either taking on too much risk per trade and therefore you had to close out too early, because a lot of the time the trades that you make can actually come back around from being losers and turn back into winners, or you are not correctly balancing your portfolio. And by that I mean, for example, if you only have short positions on, and during 1 month the market just rips higher and blows out all your short positions so they all become losers, that's a problem. You can definitely have a short bias to the market in your portfolio as a whole, but you would still want to have some bullish positions on to help balance out your portfolio, so that if the market does rip higher and blows out a lot of your short positions, well, you can still make some money on your bullish positions and help counteract and offset those losses. And that's one of the main reasons why even in a bad month, my overall losses were not that substantial. You can see right here, this is where I keep a lot of the portfolio level statistics on a month-to-month basis. And you can see right here for this month, for the month of October, I had a realized percent return of negative almost 3%, which in dollar form was a loss of almost $1,000. So I basically started the month with a little over 33K in my portfolio, and then I ended the month with a little over 32K in my portfolio. And so I hope this alone puts in perspective that when you do have a pretty bad losing month, if you are trading correctly, meaning you are managing your risk properly, and you are managing your individual trades properly, the end result of a losing month should not be that bad. Again, if you have a bad month and you lose, let's say, a third of your account or half your account, you are definitely doing something wrong. Most likely in that case, taking on way too much risk or allocating way too much capital for each of your trades. And I've said this in other videos and in my Skillshare courses, but just to reiterate here again, for each of these trades here, I do not allocate more than 5% of my capital for each one of these trades. And as you can see here with Strangles in particular, this is the majority of what I do, which is a short naked call and a short naked put at the same time, selling naked options, which theoretically carry undefined risk, theoretical unlimited losses, right? That's one of the reasons why people always say that selling naked options is super dangerous and you should never do it. But if you stay small with your individual trade size and you have very strict entry and exit points, you can manage undefined risk with great control. For example, if I scroll all the way to the end here, I'll scroll up a bit. This column right here, this is my realized profit or loss column for each of these trades here. And you can see for the majority of my winning trades, they're all roughly around the same number, 77 bucks here, 80 bucks there, 90, 76, 84, 90, 61, 58. They're all kind of around 60 to 90 bucks, somewhere in that range. And then for the losing trades, some of them are quite small. Losing 70 bucks here is no big deal at all. And then for some of these bigger losers, minus 350 here, minus 121 here, minus almost 500 bucks here, minus 449, 340, 143, so on and so forth. But nowhere do you see here a loss of like $5,000 or some huge catastrophic amount that would destroy my whole year. And some of these stocks here, and I'll show you in a minute, had some unbelievable moves. I'm talking some of these stocks went up 50 to 100% in only a few weeks and blew right through my short calls. But again, if you know how to manage your risk, manage your trades, make adjustments, and know, most importantly, when to get out, when to call it quits and just move on, again, even in your bad months, it should never be that bad. Losing 3% of my account in this month definitely hurts. It was not fun to go through this process, but you can make back that 3% in a month. But if I were to lose, 25% or more of my account in 1 month, it might take a whole year or even more just to get back to where I started. And that would be catastrophic. And so now just to walk you through a few of these trades in particular, let's look at my Pinterest Strangle first. This was a Strangle, so I sold the 55 strike call option and the 28 strike put option. And this was an earnings play. I typically like to sell options around earnings announcements, and I'll explain why in future videos, but generally speaking, it is very advantageous to sell options around earnings events. But sometimes when the stock has an unbelievably huge move for whatever reason, that can definitely hurt you. So if we come over to my trading platform here, let's go to the Pinterest chart. It was right here. These two dots right here indicate an earnings announcement date. This was back in late October, and you can see right here, the stock just exploded higher after the earnings figures got announced. I'll zoom in here a bit. The stock went from right around 49 bucks per share, and on the next day got as high as $69 per share, and that's in 1 day. And remember, I sold the 55 strike call options. So in just 1 day, this thing totally blew through my call strike and then went almost $15 higher after that. And so yes, this of course is where naked options can be dangerous, but because I stayed so small to begin with, because I only ever allocated maybe 1 or 2 or 3% of my account for this one trade, even a huge move like this only amounted to a few $100 in losses. And losing only a few $100 from a $30,000 account is not the end of the world. I will live to fight another day. Let's come back over here to the spreadsheet and let's take a look at my Snapchat position. Another Strangle, 35 call, 24 strike put. Come back over here, go to Snap, and once again, this was another earnings play, and just like Pinterest, huge gap higher, and then a continuation thereafter. Right, selling the 35 strike call option, that would put me at this level right here. So on the actual earnings announcement day, in 1 day, the stock already gapped higher and exceeded my short call strike. Unbelievable. And now Snapchat is all the way up to over 50 bucks per share. Now one thing you might be thinking is, well, shouldn't you just stop playing earnings announcements? This seems like it's a pretty dumb thing to do, but not every earnings season, if you will, is going to be a great one. But from my experience, the vast majority of the time when you do play earnings announcements correctly, it does actually pay off. The previous 3 earnings seasons prior to this one, the previous 3 quarters basically, they were all hugely profitable for me. Because the vast majority of the time when the earnings figures did come out, the stock stayed well within its expected range, its expected move. For whatever reason, in this last earnings cycle back in October, a lot of stocks just had huge moves way outside their expected range, pretty much all to the upside, and it just didn't work out. And that's just a fact I have to accept, right? Not every market environment is going to be conducive for your trading strategy. Sometimes the market makes it super easy for you to make money with your strategy. Other times, the complete opposite. So I hope this does give you some pretty good insight into what a pretty bad losing month should look like for you if you are a very active trader like myself. And this should be applicable to whether you are trading options like myself, or if you have a different approach, or if you're trading stock or Forex or whatever. Yes, I understand that there are of course people out there who do try to go for the moon and try to make huge profits very quickly, doubling their account, etc., etc. And yes, sometimes that does pay off. But if you want to be successful long term, if you actually want to be able to stay in the game for the entirety of your career or for the entirety of your life without blowing up your account, having to start over, or having huge swings in your portfolio, these are the kinds of things you need to keep in mind. Staying small on a per trade basis, not allocating 100% of your capital at one time amongst all your trades. You always want to have some reserve capital, some cash just sitting on the sidelines in case you need it, and then managing your trades very effectively and very carefully. Know exactly what your criteria is, your requirements for trade entry. What do you look for in the market to signify whether you should or should not make a trade? And then once you come across a good trading opportunity, before you even make the trade, before you hit send on that order, know exactly when you're going to take your profits and where you're going to get out for a loss if you need to do so. Have everything planned out ahead of time, and do not deviate from those rules and those mechanics that you have specified for yourself for your given trading strategy. And then lastly, I would say to keep on trading. Even when you have a bad month and you lose some money, the only way you're going to make that money back is if you keep making more trades. High quality trades. Don't let the emotions get to you. Stick to your mechanics, as I've said time and time again, and keep laying out more and more high quality trades. And never be ashamed of your losses. As long as you're able to learn something from it, that's all that matters. Alright, so that concludes this video. Thank you so much for watching. And again, if you are interested in taking some in-depth classes on options trading, and stock market investing, please check out my Skillshare courses. Links in the description of this video. And lastly, if you enjoyed this video, please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. And make sure those notifications are turned on. I'll be dropping new videos every Monday, Wednesday, and Friday, and you don't want to miss out. So thanks again for watching, and I'll see you next time.